Hello everybody, welcome back for another video. Hope you're all doing well and that you are all having a great day to start things off. According to a report conducted by the Royal Bank of Canada, Ripple and XRP could help banks significantly reduce transaction times and costs. As per the report, blockchain technology can help the traditional banking industry improve its overall services. The Royal Bank of Canada said that Ripple's products and XRP are the best examples for understanding how blockchain technology can disrupt the banking industry. They said, and I do quote, Ripple created an open source, peer-to-peer decentralized protocol with a network of participating financial institutions, or RippleNet, and a series of individual technology solutions, including payment processing XCurrent, liquidity support XRapid, and payment access XVia, end quote. This was explained by the bank. For the bank, it is very important to use the complete solution as an example of how blockchain could totally disrupt the financial market. This means that in order to have a better experience using XRP and its corresponding ledger would make things even more efficient. The bank explained, in this solution, XCurrent, XRP is used as a bridge asset, meaning that it is a store of value that can be transferred between parties without a central counterparty and thus support liquidity between any two currencies, end quote. A lot of people don't know, and I've tried to explain this before, maybe not as in depth as I possibly should have or could have. It's that pretty much a lot of people think that you need, or rather only XRapid is able to use XRP. You are also able to use XRP with XCurrent. This is kind of the one of the main arguments against XRP is a lot of banks are using XCurrent. This is why I always say to please do your own research, because I try to give as much information as possible, but I always miss little gaps and stuff like that. The point is even if banks are using XCurrent, this does not mean that they are then out of using XRP. It is still possible to roll through the entire system. And also the one of the main focuses that a lot of banks are actually doing right now, especially when they're using XCurrent and are then able to use XRP, is that this is becoming incredibly important because you no longer have to pre-fund accounts with other countries' currencies in order to be able to send them money back and forth. So when they are using XCurrent and are able to use XRP, even if they are using or not using XRapid, you'll be able to send money between countries such as even like Thailand and Mexico, which is something that is extremely rare as you have to have these accounts pre-funded. But now just using XCurrent and or XRP, you do not have to do this anymore. They said with it, banks are to consolidate their liquidity into one XRP account instead of holding the local currency, like I just said, in different accounts around the world. This is very simple and it makes markets directly between the banks. With XRP, banks are able to substantially reduce the number of intermediaries involved. Furthermore, the XRapid product could help institutions reduce costs between 40 to 70%. The Royal Bank of Canada is the largest bank in Canada. The institution has more than 16 million clients in the country. XRP is now the third. You guys know that it's the third coin. One of the major things when you watch people or institutions, especially banks, when they talk about using RippleNet and or using any of Ripple's other products, they tend to all make this very clear that the reason that they're getting into it is because of the savings of 40 to 70% of who if they were using Swift or using any other institution and or network. Being able to save even 15% is a very large incentive. And when you can save 40 to 70% and not have to pre-fund accounts for different currencies around the world, if you are trying to send money from country to country, and especially if that country does not have a highly liquid currency in that, let's say the US dollar and the euro are highly liquid as many people around the world are using them. If you're from a smaller country and you're trying to send money to that country, this is why Western Union and MoneyGram have succeeded for so long, because they were this odd bridge, and this is why they were able to charge 25% as a fee for being able to send money back and forth. The thing to take away from all of this is to really look into, I know people don't like XRP at this point. It is a non-factor. I'm just going to say that, whether you like it or not. In my humble opinion, as a person sitting behind a microphone, I am fairly certain, in my view, that Ripple and XRP are probably going to be some of the largest things in the financial industry within a year or even a couple of years. When you have the Federal Reserve of the United States talking about that they've tested Ripple 2 years ago, when one of the people on their advisory board is from the Fed and two people are from the SEC, and the people who give out licenses in New York City for people to be able to trade, buy, and sell cryptocurrencies in New York. Actually leaves his office in New York to work for the Ripple team. And you have the Royal Bank of Canada talking about the future prospect of using XRP. It's all there. Don't know how much more information to give. Obviously, I'll keep on, should something highly significant happen in the Ripple and or XRP space. Over the last couple of weeks, there's been like a lot of like meetings and stuff like that, and they've been on panels, and so I really won't bring these up because the Ripple team, for what it's worth, Vitalik, Hoskinson, they all kind of do the exact same thing. They kind of like mimic what they said before, so they can just kind of move the space along and let other people know exactly how much, what they're doing inside of their own project. So I won't really mimic anymore what Brad Garlinghouse is saying because it's usually the exact same thing. But the fact that the largest bank in Canada is talking about the advantages of using XRP, that is something to definitely keep your mind on and also to pay attention to. Next up, Morgan Stanley is in the news. U.S. banking giant Morgan Stanley is planning to offer clients Bitcoin trade swaps. Anonymous sources told Bloomberg on Thursday, the 13th of September. They are always anonymous. I don't know why these people can't just show their faces. Citing people familiar with the matter, the publication reveals the U.S. multinational will follow in the footsteps of fellow Wall Street players in pursuing Bitcoin exposure options. According to the sources, Morgan Stanley will deal in contracts that give institutions synthetic exposure to the performance of Bitcoin. Investors will be able to go long or short using these so-called price return swaps, and Morgan Stanley will charge a spread for each transaction. The news marks the latest commitment to Bitcoin interest from Wall Street giant Goldman Sachs last week, refuting claims that it had dropped plans for a Bitcoin trading desk. And Morgan Stanley's spokesperson declined to comment to Bloomberg about the plans, of course. In addition to the unconfirmed Morgan plans, the past week has also seen banking giant Citigroup insiders hint it is planning an entry into Bitcoin trade products. Like similar potential offerings from Morgan and Goldman, Citigroup's clients will be able to gain exposure to Bitcoin markets without holding any other cryptocurrency directly in what is known as a non-custodial trading. I think we're going to be seeing not only, the institutions getting into it. That's something, this is to be expected. I'm actually surprised that it actually took them so long to even get into it then. What we're seeing right now is that a lot of them are still on the fence. You may notice when they talk about getting into the cryptocurrency space, especially into the Bitcoin space, they're talking about, it may not be physically on paper, but people say that it is on paper, i.e. it's not the actual physical thing, if you can say that Bitcoin is actually physical. They're afraid to still say that they are physically into Bitcoin, that we hold Bitcoin in our accounts, that we have accumulated and are accumulating cryptocurrency, not only for ourselves, but for our clients. So they're all doing these trade swaps and things that, you're trading pretty much cryptocurrencies through computers. We're going to get to a point, if we have not already, as they are, hush hush and not really discussing a lot of things, where we're going to see that a lot of banks are actually going to start announcing that they have been into cryptocurrency, that we had another bank talking about they've been planning this for about 5 years or something like that. I think they're testing the waters. I think they are afraid to say that they are fully into cryptocurrency because it makes you look a certain way, if that kind of makes sense. Bitcoin is still this very new thing that is new to them, that they don't really understand. So I think the easiest way for them to slide into the market is to say that they're offering non-physical custodian type things. We're definitely treading very carefully, but without a shadow of a doubt that they are all planning on getting into cryptocurrency as hard as humanly possible in order to be able to maximize profits. But for the moment, it's still nice that they are at least coming out of the woodworks and announcing that they're, that they have plans, what have you, even though they are anonymous, that they plan on getting into the cryptocurrency space. Because once the New York Stock Exchange and the NASDAQ pretty much confirmed that they were definitely getting into it, that was remember I was talking about months ago, we need one domino to fall, and everyone else, you may have noticed the last 2 weeks, we've had constant institutions, we're definitely getting into it. Yeah, we're going to do this with it. They've been planning this for quite some time, but they were waiting for the first domino to fall. And the greatest part about all of this is we're not even going to hear about these smaller institutions, but they're also going to be just as important. These are the people who have very small mutual funds, and people who have retirement funds, and people who are even we had news sometime in the summer about a lot of institutions or even like universities in the United States who also, if you didn't know, universities in the States are very rich, mainly because of how much they charge for tuition, but that's another thing in itself. They also act as like mini banks sometimes. They also have like retirement funds within the actual university. I know that sounds completely insane, but when they start collecting cryptocurrencies, if they have not already, this is going to become another big thing with institutions getting into the cryptocurrency space. Anyway, let's move along. This is a whole nother discussion by itself. This is the Morgan Stanley news. Very good. You know, whatever you might think about traditional finance, this still throws another legitimate bone, if you will, at us, as they are, rather we were in this first, and now it is something so amazing and so fantastic that they are dying to get into it as well. That's just how I will leave it, at least for the time being. Next up, Changpeng Zhao, I know I probably mispronounced that, the CEO of Binance, better recognized as CZ, has said that crypto still has room to grow by more than 1,000 times in the years to come. Earlier this week, as CCN reported, Ethereum co-founder Vitalik Buterin stated that while the cryptocurrency sector as an industry can grow by 1,000-fold, it is unrealistic to expect the price of cryptocurrencies to see 1,000-fold gains in the future. The blockchain space is getting to the point where there's a ceiling in sight. If you talk to the average educated person at this point, they probably have heard of blockchain at least once. There isn't an opportunity for yet another 1,000 times growth in anything in the space anymore. End quote. This was said by Vitalik Buterin. A lot of people are not too happy with what he said. In 2017, the cryptocurrency sector has seen its most explosive growth rate to date, as major cryptocurrencies such as BTC, ETH, XRP, and Bitcoin Cash, I have no idea what the letters are, increased by 30 to 500-fold within a 12-month period. That are pretty great returns. The industry experienced such an exponential rate of growth in a period in which cryptocurrencies were being introduced to the mainstream for the first time. Major markets like Japan and South Korea demonstrated unprecedented levels of speculation and interest, which ultimately led the Bitcoin price to surpass $24,000 in the cryptocurrency exchange market of South Korea. We were talking about what they call the kimchi premium, and this is why the South Korean government has yet to give proper regulations, because they even openly said that they're afraid of this premium coming back to the cryptocurrency market, whereas people in South Korea and potentially even in Japan in the future will completely go insane once again once the market is legitimized and raise the prices of cryptocurrency not only around the world but also in their country. Buterin stated that based on the current valuation of the market, it is not realistic to expect the valuation of crypto market to increase from 200 billion to 200 trillion, which is equivalent to 70% of today's global wealth. As that assumes cryptocurrencies would take over reserve currencies and operate as the world's primary method of payment, which, to be kind of fair, is what a lot of people are actually predicting. They're saying as the growth of cryptocurrencies continues, they actually expect not even a $200 trillion valuation. They said that this can actually happen as we hit around the $50 trillion valuation. What they expect to actually happen first in the cryptocurrency world, in the cryptocurrency space, and in the crypto blockchain future is that eventually crypto will start to absorb the money from stocks and bonds, as there's expected to be a stock market crash. They're also expected to absorb some of the value from gold and silver, as people will notice that that crypto could potentially be it's an easier method of sending money back and forth. The argument has been that you can't chop off a piece of gold and then put it into a box or into an envelope and send it to someone around the world as quick as you would be able to a cryptocurrency. So once we've absorbed a lot of the value from these things, that eventually global currencies will then fall. And this is when people will start taking their money that they had in these currencies and pushing them into cryptocurrencies. And this is where we kind of get these $200 trillion valuations from. But it's expected that eventually we will hit 40 trillion. These are just numbers that people throw out there. These are not numbers that are necessarily going to happen. Don't assume because I said so that we're going to have some crazy utopian, dystopian future where governments have toppled and, $200 trillion market cap and so on and so forth. Still, CZ argued that the cryptocurrency market can still absolutely grow by 1,000-fold in the long term as major cryptocurrencies like Bitcoin and Ethereum reach mainstream adoption. He said, I still disagree with this. I will say crypto will absolutely grow 1,000 times and more. Just reaching US dollar market cap will give it 1,000x. That's just one currency with severely restricted use cases, and the derivatives market is so much bigger. Yeah, we're all pretty much, for those who are new or maybe even been here for quite some time, hello again. What it comes down to is that crypto is expected to absolutely absorb everything, and not even just Bitcoin, not even just XRP, not even just Ethereum, not even Litecoin. For those who were watching other videos, it's expected that crypto will eventually digitize everything, as it were. And this is where we kind of get that idea that we're going to have 1 billion people in the cryptocurrency space, simply because if everything is crypto and everything is digital, all of the money that was before in fiat will eventually go into the cryptocurrency digital space. And this is why even... who was it? Was it Coinbase? They said a couple of days ago or something like that they expect to eventually have, I think, like thousands, if not tens of thousands of coins on their platform. This is because they plan on becoming a crypto bank, or a bank in general, and that everything in the world will eventually be digitized, and they'll be able to have those on their platforms as well. Kind of makes sense. Hope you kind of get it. Point is, a lot of people aren't too happy with what Vitalik said, especially, I mean, to not even give props to your own coin that you made. I understand, like, I get mathematically what Vitalik said, and I mean, even realistically, I think I said this before as well, even if we have a 20x, a 50x, a 10x on Bitcoin still gets us a 70,000, 20x is 140,000. I'm still fine with that. 40x, we're definitely, we've absorbed the US dollar, what have you. I get what he means mathematically, but Vitalik has he's been kind of out there. He's definitely, don't get me wrong, he's one of my favorite cryptocurrency people out there. I think that maybe he should not be the voice. Maybe he shouldn't be on TV anymore. This is kind of how I feel. I feel like we need someone who's very diplomatic. He seems very young and opinionated, and this may not be the way that, I don't know. I have my own opinions on it. I think even myself, I could just be brainwashed. I could just be used to how people are supposed to look and supposed to act when they go on television. Maybe all crypto is still very new to me as well. The point is, a lot of people are disagreeing with Vitalik over the last day or two because you can't trash a market that you're in. It just kind of doesn't make a lot of sense. Anyway, let's move on. Crypto wallet startup known as Vault has announced that it is launching a wallet that stores non-fungible tokens and other crypto collectibles on its Apple App Store. This is not a paid advertisement. Co-founder John Egan told Coinbase that the company is looking to make it easier for new users unfamiliar with blockchain to purchase these collectibles and hold them. An issue with many current wallets and other tools, he said, is that they are focused on developers rather than casual users. Decentralized apps, or dApps, are one area that he sees drawing potential new users into the space. He said the motivation here is no one wants to build in an ecosystem that customers can't get access to, so it's really important to build these on-ramps. Vault doesn't present them with a lot of technical information, just gives them a way to start using these dApps, end quote. Moreover, Vault will not list token prices or enable the trading of tokens, he said. It's like the early days of baseball cards. You didn't buy them to make 50 times their value later. You bought them to own them or trade them with your friends. I think that's a big opportunity with collectibles. You want to have these things because you want them, not because you're chasing prices. I think that's what the future is. The utility is coming. You can kind of see it in the user interface. The application doesn't attempt to encourage this idea of profit seeking. It encourages this idea of holding things because you believe in its intrinsic value, end quote. He likened his value vision for Vault to Apple iOS, noting that while developers can already create apps for smartphones, introducing an ecosystem that made it easy to share and use apps spurred adoption. First things first is that the reason for all of this, the reason why this is semi-big news, what have you, is that we've spoken about before, everyone is looking for an app that is going to bring the cryptocurrency space forward. As young people, millennials, as I am, many other people are called, it's believed that the only thing that is going to keep our attention is an app that we're actually able to use on a daily basis. And this is what will get many other people into the cryptocurrency space. So what a lot of people are trying to do now, because it's believed, rather a platform like this is that what they think is that we're going to, at some point in the next couple of years, have a lot of platforms that act similar to CryptoKitties in that, people will have collectibles, people will have digital collectibles, and this will kind of be the brand new thing. So when you have an app like this and you can just collect these crypto collectibles on your phone and trade them between your friends without actually having to look for a price or look through a price. I mean, I don't know, how well that's going to work out. I think people can be not greedy, but people like to see that there's something, whatever has a value. But this is kind of interesting, especially on the App Store. I don't have the actual article in this, but Apple has been delisting a lot of things that have to do with cryptocurrencies as of late. I think Google also did something like that. I'm not exactly sure the exact reason why they are delisting these things. I don't know if it has to do with regulations, or maybe the apps also have coins that are not yet legal, or whatever the case might be. But it's kind of unfair. Someone was mentioning this before in a podcast. They were saying they think it's you shouldn't be able to have control over, unless you're having things in an app for people to buy illegal things, but what have you. But to be able to do things with cryptocurrencies and these things being delisted, it's kind of it's very unfair for people inside the cryptocurrency space, whatever the case might be. We're going to be seeing a lot of things like this in the upcoming future. So let's hope that the cryptocurrency space continues to flourish, and that someone eventually finds that golden app that will keep our attention at bay. Next up, Ethereum Classic is in the news. Day 2 of the Ethereum Classic Summit kicked off with Tom Lee of Fundstrat speaking about the first time he really got into Bitcoin and how the sheer economics of cryptocurrencies opened up a vista of avenues for him. Lee, who was part of the discussion panel over both days of the conference, talked about the similarities between cryptocurrencies and traditional financial tools, such as bonds and equities. It was pointed out to the audience that in both cases, the branding has been correct, with another similar tangent being the amount of time it took for people to grasp some details about both commodities. The financial expert also spoke about how the cryptocurrency asset itself was something that needs to be used, unlike the traditional commodities that need fringes like receipts and bills. The discussion then moved on to price after a tumultuous couple of weeks that saw the price of cryptocurrencies take a massive fall. He said, "Unlike other markets, the price variations in crypto are so different, it is very surprising to see. Because there is no fundamental value that includes pay dividends, the price momentum plays a much bigger role, unlike the traditional financial world," end quote. The financial analyst was confident in saying that the products and services in the cryptocurrency industry are undergoing leaps and bounds of development, and in a few years, they too will come close to the standards of stocks and bonds. Continuing on the price run, Lee went on to say that in cryptocurrency, the retail investors made up almost 90 to 95% of the total investments. Retail is me and you and I, making institutional investors into a niche. This, he said, was a huge disparity with the traditional financial market, where the institutional investors played a much bigger role. Tom Lee was also asked about his theory of connecting the Metcalfe's law with the cryptocurrency industry. He said, "So the Metcalfe's law basically states that the effect of telecommunications network is proportional to the square of the number of connected users of the system. This idea that the value is not a linear function, but rather a log function, is something that is arbitrary to Bitcoin and the community. The users drive up its value, and sometimes in terms of many multiples. For those who did not get that, it pretty much means the more people in the network, the more people that are using cryptocurrencies, the more valuable that they become. So as we enter a future where we potentially have billions or even just 1 billion people in the cryptocurrency space, the prices are expected to continue to rise, because this also means people who are trying to get fractional pieces of the other cryptocurrency space, but also the other people who are also contributing to the cryptocurrency network and or mining and or doing any other thing like that. This is kind of the idea behind all of that. The panelists also responded to some common questions that abound in the crypto sphere. Lee further gave his insight on the long-term holding of cryptocurrencies as well as short-term. He stated that long-term players in the space hold onto cryptocurrencies for a long time, obviously, and conduct a sell-off at a peak, whereas short sellers look to make a quick profit and get out. It was also pointed out that some of the trading platforms see the trading market cap difference between Ethereum and Ethereum Classic was also exactly the same as the total market cap, something that may come as a surprise to many. I'm not going to really... He talks about Doge, like it's a long article. The point is, the future, even according to many people who are traditional financial experts, there's a reason, they say that it's very bright. There's a reason why so many people are getting into the cryptocurrency space even as prices are falling. Talking about prices, I don't know what to do with this market anymore. Like, I actually can't deal with it. Go outside, prices are down. Come back home, prices are up on Ethereum by 20%. Apparently, people were talking about that Ethereum was excessively oversold. People were selling it for no apparent reason. Prices are going back up. I'm terrified to buy back into the market because I have something that, I don't know if it's just genetic. For some reason, when I try to buy into the market, prices are already going back up. I try not to FOMO into the market. I end up buying something the next day. I wake up, everything is red because prices have fallen back down. Who knows exactly what's going to happen, because also you kind of run into this situation. I'm sure you've all gone through this as well, where you don't buy, and then you wake up in the morning and it says 38%, and you're like, well, I guess I should have bought. And the moment you do buy, that's when it starts going red again. No one knows what's going to happen with the prices. I mean, it could have been something with the Morgan Stanley news. It could have, I don't think the Royal Bank of Canada talking about Ripple would have affected the price of Ethereum. I think a lot of the backlash that Ethereum has been getting over the last week, 2 weeks, had a significant bashing down of the price. Hopefully it goes back up because, as we know, Ethereum is also controlling a large amount of the market right now because of all the fiat pairings and the other crypto pairings that it has attached to it. Point is, market, at least for now, is going back up. Let's hope that this continues. To be fair, no one ever knows where the cryptocurrency prices are going. That's going to do it for this video. Thank you all for watching and or listening. I hope you all enjoyed. Hope you guys are having a great day, morning, afternoon, and or evening. Thank you once again for watching and or listening. Hope you enjoyed your day. I don't know where you all are. Thank you once again, and I'll talk to you all soon. See you.